Been concerns of a slowdown in China's growth and financial risks. I spoke to Nicholas Borst, China program manager at the Peterson Institute, if focusing so much on the exact China's GDP figure is even necessary.
Well, investors tend to look very closely at these numbers in order to get a sense of the direction of the overall economy. But I agree, it's actually not that important whether it's 7.3, 7.4. What's most important is to look at the composition of growth and to see whether the structure of GDP is changing in a way that will sustain long-term economic growth rather than quarter to quarter.
I recently hosted a panel discussion about China's growth, and I asked the audience a question whether they were more worried about the slowdown in China versus the Federal Reserve actions. And of course, the overwhelming majority of folks in the audience were much more concerned about a potential slowdown in China. So my question to you is, how serious or how significant is this slowdown in China, or is it really just part of the new normal?
So if you look at the early part of the 2000s, China was adding about 1 percentage point to global growth, which is significant given that global growth is about 5% during that period. If you look at China today, it's still adding about 1 percentage point to global growth. So even though the Chinese economy has slowed down a bit, because it's so much bigger, it's still contributing to growth. So obviously, as the Chinese economy continues to slow a bit, it'll hurt some countries that have become reliant on exports to China. But overall, China is going to continue to add a lot to global growth for now and into the future.
There has been a sprinkling of recent reports of private sector companies essentially defaulting on their debt. Some are worried that this is going to cascade perhaps on a larger and broader scale. Is that something that you're looking closely at, and is that something investors should be concerned with?
I think it's a legitimate concern. Credit has grown very, very rapidly in China over the past several years. And it's natural that there's going to be some increased defaults as the economy sort of digests this period of rapid credit growth that we've gone through. That said, Chinese banks are still well capitalized. China's debts are mostly internal rather than external. They don't have a lot of foreign currency denominated debt. So the risks of an acute financial crisis like we saw in the US or in Asia in the late 1990s is pretty limited. So there's going to be a higher probability of defaults going forward, but I don't think there'll be a financial crisis.
The People's Bank of China issued a report recently that talked about how private financing has come down. I understand the government has been trying to curb or crack down on this shadow lending. Perhaps you can help us explain what the shadow lending, number one, is, and second, why is that significant if you're concerned about perhaps money into the system or the amount that the system can lend out to individuals?
Yeah, so as I mentioned, credit has grown very rapidly in China, and the places where it's been growing fastest are actually outside of the traditional banking system. So that's trust loans, entrusted loans, bankers' acceptances, all these new financial products that have really sprung up in the last couple of years and become very important. These are what make up what we commonly refer to as the shadow banking system in China. And it all comes down to it's driven by regulatory arbitrage, where China has strict controls over many interest rates, has tough prudential regulations on banks, and limits the amount of loans they can make at any given time. So to avoid a lot of these controls, they've invented new channels that help them circumvent these regulations. And so that's the primary driver of shadow banking credit growth in China. And it's important because these channels tend to be less well regulated, so there's more potential for bad loans to be made. And Chinese regulators have rightly tried to crack down on this in recent years. We've seen a drop in the growth rate of shadow banking credit, but it's still a big problem that's going to take a lot of time to work through.
All that, of course, a part of the financial reforms that the Chinese administration is taking on. In your opinion, for the rest of this year, back to reforms, what is the number one issue they should probably be tackling or focused on?
I'd really like to see them put in deposit insurance this year. They've been talking about it for more than a decade, yet every year it seems to get pushed back. We saw 2 weeks ago there was a mini bank run in a small rural bank in China. So I think putting together a national comprehensive deposit insurance scheme should be a top priority. After you do that, you can move to the more difficult structural reforms in the financial system that involve removing the interest rate controls that have distorted so much growth in the economy.
Nicholas Borst, thank you. He's the program manager at the Peterson Institute.